Oh, it's working. Huh. Right, well, YouTube was having a laugh a minute ago. I thought maybe we'd gone too far in yesterday's stream. It banned me, but no, it appears we're all good. Okay, so today we've got extra sound effects. Getting a little bit high tech. And yeah, good morning everyone. Welcome to the London session. Currently, trading wise, there was a very early on trade around 6:40 something, 6:30 this morning, which was too early for me to get involved in. I could have still got involved when it came back here, but I chose not to. But it would have played out nicely, obviously. But overall, what I was looking for was a continuation of this bullish move up from either here or here, and it came to here and shot up. If it comes back down, I'll still be interested at the moment. If it continues to break up, I'll be then looking at the next 50-minute range. In terms of shorts, like I said yesterday, well, what I wanted to happen yesterday was this for longs, where we get a new bullish range, it comes down, taps in, and continues on before looking at any shorts from higher up. And there's only one real sort of 1 minute area that I'd be looking for shorts within this whole thing. So I'd be happy to take it if it occurs from there, because there's only one valid area. But really, I don't particularly like these massive ranges when you get them. Taking direct entries from there. I prefer it to, on the 15-minute, keep moving up like this, take continuations long, and then give a new range short where you can then take continuation short, rather than just getting directly in on a 1 minute from a big 15-minute range. It is always a lot more risky. How's that? That's pushed. No, it hasn't. It's just equal highs. Okay, so it is potentially coming back down to here. Good morning, Isuru Chaturanga, in other words, Avix. How you doing, buddy? So yeah, there was some sort of entry here. If I go back, just take it to where price was this morning. Get rid of that. And so this was the current 15-minute range. If I can show the 15-minute on the 1 minute with candle plot MTF, which is a fabulous little indicator which shows a higher time frame on while you're still on the current time frame. So you can see the 50-minute candles. This was the 50-minute low and the current 50-minute high of the bullish range. It came down, tapped a valid 1 minute area which had inducement, and then I just wanted it to break, or I would have wanted it if I were up this early, to break this valid high and close above it, which it did. Break and retest entry, covering the low with at least 2.5 pips. And then, obviously, if I'm targeting 1.2R, that's an easy win. If I'd taken a loss before that and I wanted to target 2.4, that also would have hit. Now, would it have hit 3.6 if I'd taken 2 losses before? I don't think so yet, but got close. Very close. Anyways, that's kind of the dealio with that. It looks like it's just going to carry on pushing up from here. Whew. Yeah. So, yesterday, obviously we were talking about hottest actresses. Getting back to something we're interested in. And someone in the comments said Dakota Johnson. She's alright. I don't think she stands up to any of our pillars. Our 3 pillars of womanhood. Yeah, much quieter as suspected in the morning in terms of stream viewers, but it's okay. Happy to talk to myself. Got to have someone to talk to, haven't we? So what's going on in the news today? The fake news. Apparently there's going to be an election in the UK. On the 4th of July. Independence Day. I don't think I'll be voting. Unless anyone has the unless anyone's promoting or pushing for trading to be tax-free, then I would probably vote for that person. Okay, so we've pushed up and we've broken this M15 now. So that, for me, is kind of done with. Unfortunables. That would have hit the 3.6R. Now we can start to look at the ranges in this new 15-minute on the 1 minute. So we have unmitigated source down here. And yeah, there were basically no trades for me yesterday. Price just smashed it down. Continued to go down all the way until long past my session was over. Oh, we've got 8 of you now. That's good. Yeah, sorry for anyone who was confused. The previous stream just did not want to start. For whatever reason, I don't know. I thought for a moment YouTube had banned me for being too explicit yesterday. But no, it's all good. So how are we all? How are we doing? Talk to me. Are you marking all the 1 minute open business zones inside a 15-minute range? Yeah, they're exactly. That's pretty much it. It's a very, very simple strategy, and very simple management. And it works because of the management. It's been a pretty good week for it. There were 4 winning trades on Tuesday. So one big one on Wednesday. And if you're up early enough this morning, which I wasn't, there was one this morning. But yeah, that's pretty much it. Looking at 15-minute cemented ranges. And what I've found is that what's really nice is if you get a really big 15-minute push, and then it starts to create these kind of internal ranges like this, shorts would work out really nice in this scenario. And you're almost like getting in on the correction. And I was saying earlier, this big range itself, there tends to be, is either there's a case that there's a lot of potential 1 minute ranges in there that you could, and you don't know which one it's going to go from. You could take a bunch of losses within there. So I actually much prefer it if price comes to this area and then creates a new bullish range, and then you just take it from there. Sold GU, did you now? That's carp fishing. The carp fisherman. It looks like quite a good area to sell from. I'll give you that. On the 15-minute anyway. I probably want some more kind of confirmation. I assume you're playing some kind of fair value gap strategy on that. Good morning. Good morning. But yeah. Taken some sort of inducement here, liquidity, whatever you want to call it. Tapped in. Good smash down. Hope it goes well for you, sir. So 2706. Right. Well, good luck. Good luck. Keep us posted. overlapping fair value gap with reverse lows and engulfing inducement. Negative news on the GBP. So let me try and understand this. So let's break it down. Overlapping fair value gap with reverse lows. Overlapping fair value gap with reverse lows. And engulfing inducement. Well, okay. I'll take your word for it. Looks like it's pushing down. So I tell you who else is quite nice. Anyone watch that Fallout series? What's her name? Ella Purnell. She's nice. Big eyes. Yeah, I think I like the big eyes. Could you 10 to 15 second time frame? Oof. It's been a while since I've looked at the seconds, but why not? Got nothing else to do. What am I looking at? The fact that it had a break. You're getting in based on the break here. Okay. Okay. Explain your ways. Have a flag pattern higher. Oh my goodness. You know what? I will take your word for it and respect it. And respectfully move back. I get confused when people talk about their own strategies. Aggressive break higher, then short of that aggressive move. All right. Well, alrighty then. Could you show the trades you took previous this week with some breakdown, please? Yeah, it's all the same. It's all the same stuff. A few trades, the Tuesday trades, loads of them. Okay. Let's turn this off. So I'll turn it back on. So it's all very, very simple. Okay, so you got the 15 minute. You can kind of see it, the candle here, cemented low, and then it pushed up here. So the current 15-minute range at the time of this one was from here to here. It came back down into a 1-minute range, which had inducement. So from here, price cemented here, pushed down, failed to mitigate the discount, pushed up, broke the high, creating, this is valid inducement, this is valid open for business area, came and tapped a zone in that 1 minute. And then if I hide the 15-minute candles now, you can see we had this valid bit of structure, cemented the low, cemented the high, and then broke the high. Get involved on the break, and it retests the zone. You have to be a little bit quick sometimes. And then target 1.2R. Now again, I've explained this a couple of times, but if you missed it, the key is in the management. So if I'm at say a level 0, haven't taken any losses, I'll just target 1R, or technically 1.2R, because that covers commissions on EU. If I take a loss, the next trade I will target 2R. If I take another loss, the next trade I will target 3R, until the trade hits and I'm back to being 1R up. It's almost like a martingale, but instead of increasing the risk, you're increasing the reward only. So then the next 15-minute range, or the valid cemented range, was actually from the bottom here to the top here. It cemented the high, it came down, and then there was another 1 minute unmitigated. See, it just tapped air to the left, pushed up, broke the high, valid inducement, open for business zones below, tapped in the zone, and then again it didn't create a valid 1 minute structure for me until here, where it cemented the high, and then it came and broke the high and then tapped in. Goes. Okay. And then if we look at bearish price, and this is, I was saying that I really like when we have a big bullish move and then we get the bearish range, then I'm happy to take the reversal. So we had the 15-minute range from here to here. Within that we had 1 minute ranges. So that first one from here to here came up, mitigated valid zone, pushed down. So that's was closed for business. This one pushed down, mitigated, pushed down. Okay, closed for business. This one came down, pushed up, mitigated valid zone, pushed down. So it wasn't until here, I've already got it marked obviously, where price why have we got that? That's not valid. I'm sure that's moved. I've confused myself here. So that's from there to there. Why did I mark that? I don't know. I'm going to call that one invalid, I think. I'll come back to that later. Oh wait, oh no. I'll come back to that one. It may be because it didn't mitigate the... No. I'm confused. I've managed to confuse myself. Anyway, let's move on to the next one. So again, We had the bullish range from here to here. Price came down. Ooh, I didn't know it was going to be so long. Okay, so we have the 50-minute range here. It's here. How do I know when it starts and ends? Well, I use the good old cemented candle theory, which is when a candle closes. So we have the start of the range is the engulfed, this bullish engulfing candle, and the end of the range is the bearish engulfing there. Now sometimes you don't know that it's going to bearishly engulf before you get in a trade because it's a small range and it hasn't done it yet. So sometimes you do get in trades before you get that bearish engulfment. But otherwise, yeah, that is the signifier of a range. Very simple method. But anyway, yeah, we had another open for business 1 minute zone within the 50-minute discount here. Bibbidi bobbidi boo, taps in. Same theory on the 1 minute, and here we have that cemented high. We break that high, tags us in, and we say goodbye. There we go. That's pretty much it. Simple, very simple. So now we've continued pushing up a little bit. Oh, yeah, it's as simple as that. Trading doesn't need to be complicated. But it's the psychology that comes into play when you are, you're an easy street if you haven't taken a loss because you're targeting that 1.2R, and so many trades will hit that. It's very high probability that you're going to hit that 1.2R. You don't know when you're going to hit, if you've taken 2, 3, 4 losses and you need to make 5R. I know those trades come, but we don't know when they're going to come. They come often enough for me not to worry about it and to use a strategy. But yeah, it can be. That's where the psychology comes in, and where you might struggle. But yeah, it is good. I've thought about trading other pairs with it. I've looked at USD JPY a bit, and it plays quite well on that, but no pairs seem to be as good as EU, and it just has the best spread. Like gold works really well with it, but I just can't be bothered with the spread on gold. That's just me. We can see if there's been any trades on other things. Maybe gold. Doesn't look like it would have. So obviously this came up, pushed down, and it actually hasn't cemented yet, till potentially here. So yeah, not really anything on gold yet today. AU I was looking at, there was something Yeah, this morning again, similar to EU. If we look at the overall 15M, would be here to here. And then there was a 1 minute within that was unmitigated. Price tapped. Broke 1 minute structure. Tagged it in on the retest. Hit an easy 1.2R. What was the most it went to? Well, you would have hit your 2.4 if you needed that. And here's. It's just going to keep going up. Imagine price is bearish and you have 15-minute bullish range and 1 minute area to buy, but price is coming from previous 15-minute range premium. Do you still look for buys there? Yeah, I will still look for that. So you could hedge against a sell, or just if it gives a buy entry and you're in a sell, or vice versa, just close whatever trade you're in. But yeah, I'd keep an eye out for any opposing setups for sure. For sure. Because the thing of it is, it really is just looking at the current 15-minute movement, and you can try and incorporate the overall swing ranges or the 4 hour and all that kind of stuff, but I found that a lot of the time you're just gonna end up second guessing yourself more by looking at too many things like that, and it's going to keep you out of more wins than it's going to save you. And when you're only targeting a small amount of R, usually it doesn't matter. It doesn't matter about the higher time frame outlook. Boring. Oh dear. So yeah, you see that the further up 1 minute stuff mitigated. So this is closed, and this is all just in the premium now, so I'm not interested in that anyway, unless price pushes higher, and then this becomes the discount. But even so, this mitigated, push up, so this I'm not interested in. And yeah, we'll just see what happens. Oh dear. Okay. How dull. How's that? Oh. GU short going for you, sir. messing about a bit, is it? The indicator which shows the higher time frame candles, sorry, just seen that question, is called candle plot, MTF. Yeah, it's really quite useful. So I've got this showing 15-minute candles, so I just type in 15 there. But if you wanted 4 hour, type 240, and that will show the 4 hour candles. Then obviously you just put it on whatever, make it visible on whatever interval you want. If you wanted an hour, you'd put 60. But let's stick with 15. I wonder if it shows, well, if you put 0 point, what that would do. That wouldn't work, would it? Because you'd need... That was stupid. Ooh. What's trending then? Trump 2024. Trending in politics, Diane Abbott. What's she said now? Diane Abbott has always stood with Hackney. Hackney will always stand with Diane Abbott. Oh, who cares? Who really cares? I forgot you can't see the screen, you can just see the window. Let me change that. What else is bloody trending? Trump, Suarez. What's Kevin Hart done now? No, I really can't be arsed with that. Nothing ever happens while I'm streaming. So with this trade here, I like to mark just to see the potential of how far the trades actually go, so that I know I've got that in the pocket and how many of those I have in the pocket and how often they occur. Because I want to, I'm unlikely to get more than 4 or 5 losses in a row. So I need to know that trades that hit 4 to 5R occur often enough. But it's fun to mark out just to see how far they do go. And this one, again, same thing over and over again. So simple. 50-minute range from the high to the low. 1 minute inside of that, so the 1 minute range, which is from this high to this low right here, cemented. Inducement fails to tap the premium, price pushes down, comes back, taps into a valid zone in the premium, creates new 1 minute structure, bearish, we wait for it to close below, there we go, and then we get involved on the close. It comes back, taps you in, and then just goes. It's as simple as that. I'm not taking into account any other bullshit. Don't need it. I've just shown you this week, you know, a few examples, and you see how simple it is. And it's, you know, you get those reactions. You get that 15-minute and that 1 minute crossover. You get those reactions, and the mistake I've made in the past with it is trying to target too high, trying to predict where price is going to go. But when you're just targeting that 1R move, it plays out most of the time. And I was getting sick of just leaving money, you know, seeing trades go into profit and then go against me because I was targeting too far. And I much prefer taking something and then, you know, sure, it's annoying, you take 1R from this trade and then you see it go like this, but I like seeing that because that shows me that my long, when I need it, there are trades that play out. Like again, if I needed 3 or whatever R today, I'd have it from this morning. So it's targeting not based on anything intellectual. It's targeting based on numbers, which I find psychologically easier. Do you have a video of your strategy? No, it's very much it's fairly new. It's you know, I haven't made anything specifically for it. I'm happy to talk about it in these lives, but at the moment I'm just trading it myself and still kind of in a forward testing and back. I'm trying to get as much data as I can, which is why, you know, I'm not running any kind of actual community or course. I'm not selling anything at the moment, but I'm happy to talk about it and trade it live and show you guys what I'm doing. Drawdown wise, I think with it, the worst I've seen is like 3 losses in a row. And I mean, the way I mean numbers is in terms of, like I said before, I'll target 1R. If I take a loss, I'll target 2R. If I take a loss, I'll target another loss, I'll target 3R. Once I've got that win, I'll then go back to targeting 1R. So yeah, it's those numbers that I am using, rather than anything that price is telling me. How do you get to the zones on the 1 minute that you're possibly targeting? It's basically, so you've got same thing I've talked about on this channel loads of times. In a bullish leg, you've got price moves up, comes down, taps, doesn't tap the discount, or taps air in the discount and buy air. For me, that would be imbalance or fair value gap or whatever you want to call it. I count as not a valid zone, and so anything but imbalance is a valid zone in here. So it has to have that failure to mitigate and a further break in order to be open for business. And you'll see that on if you look at some of the recent videos on the channel, I do explain that concept. It doesn't look like we're going to get a trade again during the live. That's okay. So we see currently this failed to tap the discount of that first 1 minute leg. So the zones open for me are here. And I would extend that to include that wick. And it would be this bottom zone as well as that, including that wick there. So like I say, anything but imbalance. A, B, I. Then following the ranges up, it's like that is mitigated. That is mitigated. That is mitigated. Then we have this one, which is unmitigated, only a tiny bit of it currently. Oh, hold on. Can actually extend the 15-minute range now. So yeah, whatever is in the 15-minute discount. So I'd have that. And now I have to increase it a little bit again. Any of these zones, we just need that 1 minute confirmation to get involved. And look, you see, well, I would have a minimum 2.5 pips. You see how little you need it to move to, so I would have 1.2R to get that money. And yeah, just follow those 15-minute ranges. What I've struggled to do is nail down particular trading sessions for it. It seems they can occur at any time during the day, which is a little bit annoying. But I'm going to have to sort that out because it's doing my head in. It really is possibly the simplest strategy. Whoa. Yeah. Anyway, guys, we'll go for a couple more minutes. Any other questions? Be happy to answer. Ugh. Only the 15-minute, yep. Well, 15-minute and 1 minute, obviously. This is powering up. It's a powerful little way of getting involved in price, which gets you a decent amount of trades. Not too many, not too few, but it's you know, it's perfect for day trading. And I'm sure you could look at it and come up with ways to stay out maybe of certain trades, like if it's in an overall bearish leg, creates bullish internal structure, comes up and taps into the premium or taps a valid zone in the premium and has a reaction, then stop taking longs. But for me, I haven't found a way to properly implement that without it being more of a takeaway than more of a hindrance than a help. Anyways, I think we'll call that a day. Doesn't look like we're going to get anything anytime soon, but you know exactly what I'm looking for now. And yeah, thanks for joining, and I'll see you next time.